Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanky Schein Wealth Management. Today is Thursday, November 19th of 2020, and I want to discuss with you today some very important headlines you might not get on your daily news cycle. So let's get right down to what's moving markets and what we should be paying attention to. Thanks for watching. First topic, and a topic I'm going to spend a lot of time on today, is the real estate market and an update overall. You know, a lot of clients, especially in the investment management world, ask me and our team here at Blanky Schein Wealth Management, Rob, why do you spend a lot of time and focus on the real estate market itself? And the take-home point is, if you think about it, it's a large component to not only the U.S. GDP, which is a very economically sensitive and huge contributor to the GDP as well, but it's also the single most important sort of especially if a first-time purchase, but large purchase, if not for most Americans, everyone in general, in terms of the most important purchase. So it's a large purchase item. It also is a leading indicator as it relates to the U.S. economy. And it's also a fundamental building block as it relates to the health of the economy. So we pay a lot of attention to it in the investment management world. And also everyone knows that a diversified portfolio includes real estate. So it's very important, whether it's your personal and primary residence or investment properties, multi-tenant and so on and so forth. So we're very well versed in the real estate world, but we also pay attention to it. And the headlines of the day will really share with you ultimately what the markets are paying attention to versus what the media is going to be reporting on, especially the financial journals. Financial journals know that this is an important story today. The October number, I don't know if you saw it, and I don't know if you'll get to the update in the headline news, but it's significant. In the month of October, the existing home sales just reported a jump in 4.3% increase versus the estimated, by all the experts, if you will, they estimated a decline of 1.2%. So that was the estimate, and there's about a 5% differential on that. But now keep in mind, the real estate market is a huge market from a valuation standpoint. So to have a 5% delta, if you will, in the financial world is not only a big miss, it's a huge miss, seismic miss. But then again, as I stated, all the polls, all the projections, all of the, everything this year for 2020, everybody has been off as it relates to their predictions. So this I don't have too much credence in. What really matters is the 4.3%, what the real market is actually doing. Now, if you dig into that's 6.85 million units in the month of October that were sold versus the 6.46 estimate. Now, this is right up against the 2005 all-time record, which is 7.1. Think about that. We're in a pandemic. We've had such a global retraction as well as a retraction and contraction here in the United States. And we've got 10 million Americans plus, and the unemployment rate, is not where it was when we first started the year this year. Now, why is that? Where is all of the real estate sort of a flurry of excitement coming from? And obviously market moving excitement. If you take that number, that's a 26.6 year over year increase in just sales alone. If you look at that, that's the all-time record that we've seen. So it's another good sort of, if you look at the report itself, get this, inventory is down 19%. That's a 1.42 1.4 million units, if you will, that are available in the market right now on a go-forward basis. That translates into not only a record low at this moment, meaning there's a short supply of basically homes on the market, coupled with right here, it's a 2.5 month supply at the current levels. So it's a supply and demand issue. Again, we also have seen the advent of low interest rates that we have this year and probably for the foreseeable future as the Federal Reserve keeps interest rates low to accommodate sort of growth in the economy. As well as, people can work from anywhere. It's the work from home sort of lifestyle going forward. And that has a huge change in corporate America, as well as a lot of different businesses are now saying, wait a minute, we're just as efficient, we can still be just as profitable. Oftentimes, a lot of our employees could be a little bit more happier in terms of their work-life balance, because let's be honest, I don't know about you, but I'm working 24/7 personally. So I'm constantly working, whether I'm at home, whether I'm in the office, but it's a 24/7 job. And so a lot of Americans have adapted to that lifestyle, whether it doesn't matter if you're at home, at work, or even on the go. Now, also the median home price is so the average home price is $313,000, and that's up 15.1% year over year. So if you're owner of real estate, you're seeing a jump in your home price by 15% just year over year. That's substantial. Again, that's probably the single most largest asset that you own, and to get a 15% increase or appreciation, at least on paper, is a good feeling, right? It's a good wealth effect feeling. And one of the reasons why the median home prices jump so much is because the high-end market, so the $1 million plus marketplace, is on fire. In fact, that is also contributing to sort of that increase in the average or the median home price being up. So all aspects of the market are doing very well as it relates to real estate. It's going to continue and propel itself as we are all, looking at maybe a potential another lockdown, and you spend more time in your home, you're thinking about stuff that you want to improve upon, or you say, hey, wait a minute, let's just trade up or just relocate, right? So that conversation is being played out again. So the threat of a second lockdown going forward could even probably add fuel to this already hot existing home sales market report in the month of October. So that's your market real estate update for right now, and thanks for watching.